A very good evening and welcome. You're watching the India Development Debate. I'm Tamanna Inamdar. The government has amended rules under the Foreign Exchange Management Act, bringing in international credit card spends outside India under the Liberalised Remittance Scheme. As a result, the spending on international credit cards will also end up attracting a higher rate of tax collected at source, which is 20% effective 1st of July. Remember, earlier this was 5% and international credit cards was not in this category. It must be noted that India is witnessing a surge in spending on overseas travel. Indians spent 104% more in FY 22-23 than last year. $12.51 billion on overseas travel was spent between April to February, and though this is to keep an eye on high-value transactions abroad, the move will affect the common man the most. Now, before we start the conversation today, let's take a look at this short report.
Foreign travel to get expensive from July 1. Tax collected at source to jump from 5% to a whopping 20%. Due to the extended hiatus caused by COVID-19 and the desire to escape the scorching weather, travel bookings have surged by 30% to 40% this season. However, the surge can also be attributed to the impending increase in foreign travel expenses, which is set to take effect from July 1, 2023. As per the announcement made in budget of 2023, the tax collected at source TCS rate on foreign remittances, including bookings for tour packages, will rise sharply from 5 to 20% of the total transaction amount from July 1, 2023. This means that if the air travel costs rupees 50,000, the corresponding TCS amount would be rupees 10,000, which is equivalent to the 20% of the entire air travel. Not only foreign tour packages, but 20% TCS rule also applies on credit cards on international transactions, which means even direct booking would come under the ambit of 20% TCS rule as per the Finance Ministry circular issued on May 16th. According to a PTI report, the Ministry on May 16th notified Foreign Exchange Management Rules 2023 to include international credit card payments in the Liberalised Remittance Scheme, which is LRS. However, if you are a taxpayer, you don't need to worry because you can claim credit for TCS payment in your income tax and adjust it against your advance tax.
All right, to speak more on this, I'm joined now by Deepak Shenoy, founder of Capital Minds, Amit Singhania, tax partner, Shardul, Amarchand, Mangaldas, and Shruti KP, partner at Induslaw. Welcome to all of you and thank you for speaking with us. Now, there's a furore on social media about this tax. People are calling it the return of tax terrorism. People are wondering, what are you going to get out of TCS, that's tax credited at source? Because remember, it's going to get adjusted against what you owe at the end of the year, and if you've paid excess tax, then you can get a refund as well. So why put people through that process? Why are you putting international credit card spends possibly on overseas travel for business or pleasure in this category? I want to start with Deepak Shenoy. Deepak, why all the consternation?
I think, Tamanna, it's just there is two layers to it. I think, first of all, a lot of people who are affected are probably affected in terms of their cash flow, but they're relatively a small part of the population. We're talking about less than 1% or 1% of India. So let me be clear: this is not like something that affects everybody in India, but a very small percentage. But it does mean that, for instance, if you have saved all your life and then retire and you have a much lower income now than you used to when you were working, and you decide to take a foreign trip, now you suddenly have to pay 20% extra to the income tax department and then try to claim it back 1 year later. This is against the principles of pretty much everything. The advance tax is not applicable to senior citizens, but TCS will be. Therefore is, that is one example. There are lots of others. There was not enough of a clarification on whether credit cards would come under LRS. The newest notification or the clarification from the income tax department seems to say that, listen, if you use your credit card while you were in India to make a dollar payment, it should have always been under LRS. We are only changing the rule to say if you are outside India and using a credit card, now it comes under LRS. which is now a bother because that means every credit card transaction you do to pay for something that's billed to you in dollars, like a subscription abroad, or a LinkedIn premium or Facebook ads from Ireland. These are all at a personal level LRS transactions. They will come under the LRS limit of 250,000. But more importantly, from July 1st, you'll see a 20% tax collected at source. Right now, it's only 5%. But that means that credit card transactions which earlier were not charged an LRS at all are perhaps, what the income tax department is saying is, hey, they should have been charged since you were in India, and B, they will be charged 20% going forward. So that's probably why the furor is, because so many things impact. It's not just foreign travel, it's also purchase of subscriptions from within India, purchase of foreign dollar billed things from inside of India.
And, the question being asked is why? What really are you trying to catch? Amit Singhania, just to understand, is this on only certain credit cards or any credit cards if you spend in dollars, or some international credit cards? Is there any clarity there?
So the notification and rather the FAQ, which has been released, I think, just a few minutes back, it does not make a distinction between the domestic cards or the international tax cards. It should be applicable to all the cards so long as you are spending by using a credit card. So it does not matter whether it has been issued by a domestic company or by an international company.
What is the purpose of this, Amit Singhania, in your view? And how will someone go about asking for a refund? If it's very basic things like Deepak is talking about, anything that you purchase dollar denominated, if you maybe have a transaction on your Apple account or on Google, etc., etc. So how will you go about getting a refund or ensuring that you've not been taxed unfairly? Because you're basically paying tax on money which has already been taxed, isn't it?
Yes. Look, I think the major hit will lie upon the persons who are doing a business travel, and they may be required to spend upon their personal credit card. Now there will be 20% extra charge upon that particular money, which they will be spending for the business purposes and seeking a reimbursement from the company. 20%, yes, will be available for a tax credit. But suppose if I'm an executive who is undertaking a business travel, my salary income does not justify my quantum of my travel or the quantum of the spending which I made on account of business travel. So ultimately, I will end up getting into a situation where I will be claiming a tax refund, and the company is also not going to refund me for this particular tax refund. So look, this will be a cash flow issue. And refund should not be an issue. Refund should not generally be an issue unless, yes, there will be timing factor, because the income tax department, in case of a huge refund, would like to scrutinize before they grant refund. So yes, it will be a timing issue. It will be a cash flow issue for these kind of executives.
Okay, so it just sounds like a very big accounting, nightmarish paperwork kind of hassle. Shruti, I just want to get your take on why do you think this has been put into place? What is the problem for which this is supposed to be the solution, and is it really going to help?
To be honest, I'm not certain why, suddenly from a 5%, this has been increased to a 20%. My guess is it's more, trying to garner more tax revenues, and at least to that extent, the government is able to get that much more cash, in form of tax, and, interest-free, that too. So, it's honestly, it really does not make any sense to personally. And I think where I also have a, bit of a trouble is, given particularly in credit card transactions, what would happen is not everybody pays off their credit card bills on time, right? So if, say, for example, this 20% is going to be collected through the credit card mechanism itself, then potentially we are looking at an interest on the TCS component also for the credit card user, right? So it's not very clear how that could be tackled really, because it's going to be a nightmarish issue even for the banks or the credit card service provider to allocate it and collect the TCS from a credit card sort of a scenario, because they don't also have real cash till the credit card user actually pays out. So it's like you said, it's going to be a very difficult situation, both for the credit card user as well as for the, the credit card service provider, without much clarity as to what purpose it will actually serve.
If I understand correctly, and please clarify on this, Shruti, expenses that you make abroad for education and for medical expenses are exempted from this? Or do you pay 20% TCS on that as well?
So that, the Finance Act had mentioned, that is, the Finance Bill had clarified that there's no change as of now for that. So whatever is the current rate, so for example, I think it's 5% for, education abroad and purpose of medical treatment, and that too only in excess of 7 lakhs. So that will continue to remain without any change. So it's basically for these, the other foreign payments, particularly, foreign travels, that the 20% would apply.
I come back to the question that I asked Shruti. Deepak, what is the problem for which this is the solution? And, it has had so many reactions with people saying things like this is just generally a bad idea. This is going in the face of the claim of simplifying tax. Or is it just a bunch of really rich people cribbing on social media who can afford to travel abroad and swipe their international credit cards?
Two things here. First, I favor a free rupee. I favor complete freedom for the rupee, complete capital account convertibility. I don't think that's a bad thing. India has been ready for it for over a decade, in my view. And such restrictions are regressive. The Finance Ministry has taken the stand that they have done this at the behest of the Reserve Bank of India. Well, I think my statement to the Reserve Bank would be, please free the rupee. And maybe the politicians as well. We would not have these discussions if the rupee was actually free. We would not have restrictions on how much Indians can take abroad. And if Indians take 100 abroad, there will be 1,000 that will come back in. Having said that, the reason why this is happening is because there is probably a disconnect between how taxes were collected, how LRS transactions were treated if done by credit card versus if done by debit card or a SWIFT transfer. So they've equated the two in this law. So therefore, there's only that equalization that's been brought in, not anything superior. But what they've done in the process is clarified that credit card transactions for buying goods and services actually comes under LRS, which means that 5% LRS should have been applied in the past and 20% will be applied in the future on such credit transactions that are used to transact in a non-Indian currency, even if you're in India. I think the reason for this is very flimsy. They say it's to bring people into the tax net. My answer is even a 1% TDS would do it. Even a 5% TDS would do it. 20% sounds a little overboard. The argument that if you earn more than 12 lakhs to pay 20% TDS, well, if people earn more than 12 lakhs of salary, they are paying TDS anyway in part of this thing. You're collecting another 20% on whatever they spend abroad. So you collect TDS before we receive any money, and then you tax us on GST on whatever we spend, and then another 20% is collected at source on assuming that more than what we spend is still what should be taxable to us, and we have to wait 12 months for now. It sounds a little extreme that this would be for that. The amount of money is so small, 25,000-30,000 crores is the maximum the government will collect, even if transactions are at the same rate as they are today, with bringing credit cards into the mix. So this 20,000, 30,000 crores is not going to do much for a government that spends 48 lakh crore rupees per year. So it's not cash flow. It is not an additional or lower interest in any meaningful way. So it seems like, this is like we have power and therefore we will use it. I don't think this is going to make a difference in any meaningful way. As it hurts a very small section of the population, it does very little for the government to do this. That's what my thing.
What is the effective impact? Amit Singhania, what does this mean? I mean, we're going into holiday season and a lot of people are planning to travel abroad. If you go by all the anecdotes of, no visa appointments available for all the countries, people are traveling abroad. Indians do travel abroad in large absolute numbers. Small percentage of the population, but in absolute numbers, a fair number of Indians travel abroad. Many prefer to spend on their credit card. and choose to spend on their credit card. What does this mean? Does this mean that your budget, while you are planning to travel abroad, needs to increase by 20% because you have to account for 20% more in terms of tax, which you may claim and get at a later date, but right now you have to have that money? Is that what it means?
So basically, there are few tips to the international travelers. To my mind, the first thing, they should keep a check upon their credit card limit, because this TCS will also go from their credit card limit. So it should not happen while they are spending abroad, but they ran out of their credit card limit, because now the bank will also be charging 20% extra. So they should keep a tab upon their credit card limit so as to mitigate any inconvenience to them. The second thing is that in order to plan, they need to plan efficiently. So, for example, if they are intent to make a advance tax payment, then don't make an advance tax payment in case you are planning a trip abroad, and you make your estimate of the expenses, multiply by 20%, and thereafter try to adjust with your advance tax installment, so that you do not end up in a substantial refund situation, which will tinker, or rather which is going to affect your cash outflows. So if I think we try to manage few things, we can try to reduce the impact, although we cannot eliminate the impact, but whatever little we can do in order to reduce this particular impact.
So, Shruti, your response to that question, you have to budget for more when you're traveling this time round, is it?
Absolutely, absolutely. I think that goes without saying, because 20% on every transaction obviously could amount to hitting your credit card limit before you know it, right? But having said that, I'm perfectly certain that it's not going to stop us Indians from traveling abroad or using our credit cards. Maybe hard cash itself might become popular again, and while it's a hassle, maybe carrying foreign currency may also gain more popularity. That's also a possibility.
So as I understand it, then you might as well carry foreign currency, because at least you don't pay 20% on that outright.
That's right, yeah.
Deepak, again, counterintuitive. You don't want people to use cash. You prefer them using their credit cards. Every transaction can be tracked. Everything is, in that open space. Why would you do this and push people towards, going back to exchanging cash and carrying cash?
Let me just say, this is not always logical. A 15% duty on gold only increases gold smuggling. We've seen this across the years. But we refuse to reduce that duty on gold, or 12%, or whatever the number is. But anything that's more than 2% is going to create smuggling, and we do it. We allow for 12% duty, and it's pointless and senseless. But it continues. I think here also there is this feeling that it will perhaps, but I don't know about the cash part, because outside of something like a hawala, I don't see, if you go and buy cash from an authorized financial forex dealer in India, you will pay 20% TCS even on the amount that you buy in India from such a dealer. The only people that you won't pay from is perhaps like a hawala kind of person. That's illegal on the face of it, and therefore, prone to all sorts of things.
No, so Shruti, there's no way around this 20%. You have to pay this 20%.
I should think not. So I think while the exchange rates possibly on a credit card maybe higher, in the sense that I have, at least personally, my credit card company seems to charge me on a higher rate when I use my credit card vis-a-vis using cash to convert from India and taking that out of the country. So that is where I was coming from, in the sense to say that perhaps it may make sense to convert from India and take it abroad. But of course, yes, you have the GST cost also, that will have to be borne. So net, I don't think you can really escape this. And I'm sure as Indians, we love to, travel abroad and, use our credit cards or cash, whatever may be the case. And I think at the end of the day, you are going to end up with this 20% TCS cost.
Pay this 20% TCS either way. It will buffer up and balloon up your budget for travel. Shruti thinks it's not going to stop anyone from traveling. Whoever has planned to will. But you just have less expendable income on that trip. And that's sad because, you might get it back at some point, but it's sad. Would you say, Amit, that this needs to change? This needs to change and it's going to impact at least the travel sector quite negatively?
Yes, I would so, and I think 20% is quite onerous, is quite, I would say it's overwhelming. So this 20% rate should go down to the rationale, which I could correlate to what the Ministry of Finance is thinking. Anyone who is traveling abroad and making an expenditure abroad must be at least falling within the second level of the bracket, which is the 12 to 15 lakhs of the bracket of the income slab. And the income tax slab rate is 20%. So why not this particular TCS, why not we only restrict the TCS to be the checkpoint? Why not try to collect the taxes from this TCS? And I think, and this is the only rationale which I could gather. So previously the 5% rate was not deterrent, but was just a checkpoint. Now they want to increase this from this checkpoint to the tax collection. So I think this is going to hurt the individuals more, and particularly as I said in my example, that who are undertaking a business travel and whose salary may not be commensurate with the quantum of money that they will be spending on behalf of the companies that they are representing. So that's going to hurt the most. So this should go down. On a positive note, look, the thing is that country has to grow and the economy has to grow, and these kind of business travel is unavoidable. So this has to commensurate with the real life example or with the ground level realities.
Okay, absolutely. Deepak, just last comment as we wrap this up. Do you think after this furore, they will walk it back, or at least ease it off, or that's not going to cut ice? Just some people crying on Twitter is not going to be enough.
The government does not really care about affluent people crying. They don't care. So I don't think, this is not a function of this. I don't think any government in India has ever cared. So if there are laws that hurt people who travel abroad, then, too bad. Until, of course, everybody wants to travel abroad, in which case that day will come one day, and hopefully things will change. But I don't see them rolling much of it back. I hope they bring it back. It'll serve their objective. It will.
But I want to ask you: is it actually this, just the richy rich splurging on expensive vacations? Because this also will include people traveling for business, employees going abroad to do the work they're supposed to. There's going to be practical hindrances. Companies who have to actually, go for work. It's not just this typecast of fat cats enjoying some, exotic holiday, and then why can't you pay 20% TCS? There's more to it than that, isn't it?
No, there is. In fact, Tamanna, they have actually issued a clarification. They've issued a clarification that specifically states that if companies are spending, there is no limit to it. It does not come under LRS. So if companies were to give their employees a debit card or a card that is linked to the company's own account, then there will be no limits, there will be no LRS, there will be no 20% extra. That comes under current account. We have current account convertibility, so there is no problem in that front. Of course, documentary evidence will have to be provided to the bank eventually, that they will say, okay, you've spent on a hotel, please give me the bills. If you've spent on something else, please give me the bills. As long as you provide the documentary evidence, there will be no need to classify this under LRS. That's always been the case. You could take even dollars in from a bank saying that I need to spend it on certain X, Y, and Y things, and that would still come under current account transaction without LRS. So companies are exempt from this in that sense. So I don't think the use cases which you mentioned just now qualify as places where there will be a problem, because there won't be a 20% extra on it. The only places they will be is if I am spending on behalf of the company. My credit card company does not know I'm spending on behalf of the company. It charges me the 20% LRS tax collected at source anyways. And then, unwinding that is a problem. So it's a better thing for me to not spend on my personal credit card, get a corporate debit or credit card, if the case, as the case may be, and use that instead. So I don't think, it was much easier earlier, but now they've made it clear that corporates aren't in the ambit.
But in any case, paperwork, more paperwork, bureaucracy, red tape, lots of work for accountants. but a pain for people who want to travel abroad. Maybe we need to stop making traveling abroad, even for leisure, as some sort of a sin to be taxed, that you have to pay a price for it. In this day and age, maybe it just doesn't make sense. Thank you so much to all of you for joining us on the conversation this evening. We'll take a very short break, but we'll be back with a lot more. Stay tuned.